let's kick off, guys. Aaron, tell me the how you got into. Let's start with how you actually got into finance broking, mortgage broking or otherwise, and then a little bit of how you then went and started looking at commercial finance.
So I came over to Australia in 1997 out of the Navy. I was a carpet layer, and like all carpet layers, I moved into finance. Kylie, my wife, actually became a broker in 2003 for Aussie, and she was pregnant with our second child, and we had a funny conversation where she noticed that because she was really showing, her strike rate went down. So there was less trust in brokers back then, but instead of getting the sympathy, I think what people were thinking is, you're not going to be there when we need you at settlement. So
Wow.
it was a different, landscape back then. So I went in and did the training and became her pregnancy relief. And I took straight to it. And so eventually the estate manager said, I know you were just going to be relief, but can you stay on? And for 10 years, I was a mortgage broker. I consider myself a recovering mortgage broker now. No offense to mortgage brokers, but because I certainly was one. But so I went through the dip in prices in 2003, the GFC, I remember, before the NCCP, I saw it come in, we're living it now. So I wasn't there in the beginning, but I was pretty close, 2003-ish. And then I can remember exactly when I got into commercial finance. I remember drinking the coffee, and I was actually talking to Sam Saphir from, he was at Maclease at the time. And there's ups and downs in the mortgage broking world. And during that time, it's 2012, I was not having a stellar month. And he came out, again, right? And I thought, okay, we're really going to listen. And I had my back to the main road in Picton.
Sorry, I've got a quick time out there. You mentioned he came out again. So the very first time that he came out, sparrows, nothing.
Yeah, like maybe 6 times, right? So
I bring this up because there's going to be a lot of people that are on this call and looking at this downstream, and a lot of people think, oh, well, hang on, no, I didn't get around to that. Well, if someone's going to bother to keep knocking on your door multiple times, probably the least you can do is answer the phone or answer the door. Right. Okay.
Yeah. In that day, it cut through. So he's describing the commercial express policy to me, which we're all familiar with. Back then, it was $75,000 maximum, 2 years GST, 2 years ABN, homeowner, and then he described the replacement policy to me, and I kind of, like, at the time, I sort of didn't believe it. So anyway, he got through. There was a moment of clarity. So he said, what are you going to do with the rest of the day? And I said, I'm going to go home and completely change my operating system and start doing car loans. And he said, yeah, sure you are. Right. And because he probably heard that 100 times. Right. So, or, some sort of positive at the end of our coffee together at the coffee shop. And I remember I went home and I thought, okay, I'm going to try this. I usually like to talk to people. I don't script very well. So I thought, I pride myself on knowing what to say, not having it written down. So I thought, okay, self-employed customers, how many of them can I remember their face? I need to be able to remember their face, and I got to remember them. And all the self-employed people that I could actually remember at the time, there were 17, I pulled out of my file cabinet, and I organized them with the worst, what I consider, which is very uncharitable, asshole at the bottom that I never ever wanted to deal with again. But I was fair enough to leave them in the pile, and I organized it to the very top, which was the nicest person. So I went from the nicest person, which I had the strongest relationship with, down to the bottom, the person I really didn't want to talk to again. And I just started at the top and called them up and said, "Hi, it's Aaron. When was the last time I told you it was cheaper and easier because you were self-employed?" "Never." "Right. Well, it is. You got to be 2 years in business, 2 years GST registered. You got to have property." And in the conversation, you can almost hear them ticking off the box as you're going through it. "That's me. That's me. That's still me. That's me." And then I got to the end of it, and they would all say the same thing. "That's me." Right? It wouldn't be in the pile unless that was the case anyway.
It's very interesting that you're saying that the way you started getting into commercial lending, firstly, it was asset finance, and secondly, it was a particular product. After someone had spent the time with you multiple times, it clicked. You worked out a strategy, and you actually pushed that. You picked up the phone and you went through your client base.
Yeah, so I called all 17 of them, and within 2 months, 9 of them had a car loan to me. So I'm thinking 50%. What? I would expect 1 in 60 is a strike rate, is an acceptable strike rate, maybe 1 in 30. And this is over 50%. So, I'm sitting.
That's when you first started too.
That's when I first started. I was unpracticed. It might have helped with the pitch, but I remember sitting there thinking, "What do I do with this? This is unbelievable." So, go ahead.
Okay, so that's how you got into commercial lending from mortgage broking. So 10 years of being a mortgage broker before you got into commercial.
Yeah, I mean, I've done my own car,
okay,
that sort of thing. But
wow.
And that's how I got into it. And although I still thought like a mortgage broker for at least 6 months, right? So, but
we're definitely going to cover that, and in the second part of our session, I'm looking forward to looking at some of those objections, because I think we're all, whilst I think you guys are both some of the best brokers in the country, I'm pretty confident you guys are probably some of the best people at overcoming objections too. And I'm going to enjoy that a lot. Mari, looking forward to hearing your story. Tell me how you started in this, your background, and when you decided to make the move across. How did you come into finance generally?
Well, I was actually working for Hornsby Hospital doing statistical research and studying criminal psychology.
Wow.
So I think it goes hand in hand. But someone told me that I'd be very good at sales, and I'm thinking, "Oh, yeah, right." And I got given an interview in a motor dealership, believe it or not. And I thought, "Oh, well, I'll go and see what the potential earnings are and what I have to do, and can I keep up my studies?" Because I was traveling to and from, it was an hour's trip to work. So I thought, "Oh, I can do this locally and work in a dealership and maybe earn the same, if not a little bit more." Well, as we all know, back in 1991, working as F&I, the sky was the limit. So the harder you worked, the more money you made. And to be honest, I made an extraordinary amount of money in the first part of my career. So I went to the interview, and here I am thinking, "Oh, how long is this going to last?" I got the job, and I was selling aftermarket. I lasted about a week selling aftermarket. I thought, the guy over in that chair seems to be having more fun than me. So
sorry, before I let you keep going, aftermarket, for those people that aren't anything to do with cars, is essentially are we talking about our insurances, or we're talking about our scratch and dent, or our tinting?
We're talking about rust proofing and window tinting and all the add-ons to your motor vehicle back in 1991.
There you go.
So I didn't last too long selling that, and I went and sat with a business manager, and all he did was whinge and bitch about working weekends. And I'm thinking, "You're making a lot of money. I need to know how to do this." And I said, "Look, I don't think I'm stupid. How about you teach me what you know? You'll never have to work a weekend again, and I'll do it." And he goes, "Perfect." So I ended up working 11-day fortnights. I worked basically every weekend with 3 days off in that fortnight, which weren't weekends. I learned F&I. I'm still friends with the guy that, his name's Glenn Jones, still very good friends with Glenn, who taught me F&I, but I got his job. So I was on the paths working for a multi-franchise dealership. We had 5 franchises from Mercedes-Benz, Subaru, Nissan, all the usuals, and a used car division. I was running that very successfully, making great money, but I was worn out. I did 64.5 hours a week under pressure, constant pressure. We worked on what they call floor plan. So if you think of it as a big credit card that dealerships have, the floor plan was $12 million. Back then I had to write 1.2 in finance every month to offset that. So the pressure was on, and I was successful. So there came a day where I thought, I don't want to, I'm missing out on so much. I was 24 years of age. Everybody else is partying like rock stars. I wasn't. Admittedly, I had invested well. I had a few properties, outside of the burbs. My first home was in a place called Wantabadgery, outside of Wagga, if anyone knows that area well. It cost me a princely sum of $24,000. I sold it for 80 about 3 years later, so I thought that was a good return. Anyway, so I had little properties and I had a little bit of money in the bank, and I thought, I'm going to give this a shot myself. But back then there was no such thing as aggregation groups. You had to go on a wing and a prayer and knock on the door of the ANZs and the Macquaries, and ANZ and Macquarie, and I will mention them because they were very forward thinking. They gave me the ability to sell their product, and that was motor vehicle funding. So I trotted off on my way with a year's salary in the bank and thought, I've got a year to make this work. And I'm 22 years in, so I think it works. Yeah. And it was hard. I'm not going to say that it was an easy transition from being employed, earning a very, very big sum of money and being comfortable and knowing that I had a job for life, to running with, I had no client base to work with. I had myself and the ability to communicate well with others. So I ended up in the local Chamber of Commerce, speaking to all the business people there. I worked with a lot of aggie business because I had purchased that property in Wantabadgery. So I knew some of the farmers and, people out rural area. And I just started asking them, who's doing your finance? Who's financing your car? So I started with cars. Cars turned into heavy haulage, which Macquarie was very good at doing at the time. So I became a bit of an expert on heavy haulage, which is the big trucking, trucks that go interstate, etc. I worked with them. I worked with small cars. I worked with SMEs, and it worked really well. So my journey, as Aaron's probably pointed out, we've seen a lot of change. And to be honest, if you knew what we did in 1991 to 1998 in car dealerships, oh my God, I'd probably be in jail by now with the rest of them under regulation. So
it's okay, we'll edit that out later, Mari.
Edit that out later. No, but it was the norm. There was sure. no structure. There was no real structure for the consumer. So I absolutely love the thought that our industry has become far more professional. It has become far more regulated. Whether you like it or not, it deems for us to be extremely professional and not like the wild, wild west as it was 22 years ago.
So Mari, I've got to ask you a question. So our session today is I suppose, about mortgage brokers looking to make the step. At what stage did you then, that would have been interesting for you because you've come from being an asset finance broker writing mortgages. So how did you go with that side of things?
Well, I actually, within the first, if we move it to 12 months, the 12 months into being self-employed, doing asset, I was starting to get, Murray, do you do mortgages? Murray, can you help me? I'm self-employed. I need my mortgage rewritten. And so it would have been 2000, probably mid to late 2000, that I thought, you know what, if I can write a car loan, I should be able to do a mortgage. Well, was that the opposite? So I understood and started learning about mortgages, and I really concentrated in the self-employed. And so that was a really good grounding for me. And so my home loan business grew very, very quickly off the back end of my asset clients. So I had the asset first, then I had the mortgage. And so I had a mortgage book for 10 years. I did sell it just prior to GFC. Not that I knew anything more than anybody else did. It was just, I realised I wanted to concentrate more on where I'd come from. And I could feel the changes, didn't know what they were, but I could feel the changes in lending. I could feel the changes in, you know, the whispers, you know, something's coming. And I just thought, you know what? I had 9 mortgage writers. And to be honest, the brain damage of managing staff, at that age, I was in my 20s, I wasn't good at it. And I sold that book not because I didn't like doing mortgages or I wasn't capable. It was the people management that I hadn't been able to navigate well enough to have a level of tolerance and understanding, to be honest. And then, so I sold that book off and kept running with my assets. Today, as it stands, I've got 6,500 active clients on my database.
Wow.
So, but mind you, that takes 22 years of constant being involved with your clients. So then what happened, GFC came about and a few changes. So it was about 2.5 years ago that my clients, because I was referring my mortgages out, that my clients said to me, Murray, when are you getting back into mortgages? And to be honest, I was a little bit resistant because again, I still manage staff. I'm managing up to 8 staff now, but I'm 48 years of age. So the difference in managing staff now to when I was 25, 26, 27 was very different. So I thought, you know what, I've got that management skill set now. Let's go for it. So that's what I did. 2.5 years ago, I brought back in mortgages, but I only just do the mortgages within my own book. I don't really actively go looking for new to the book if they come across and they're referred by my clients, but I ultimately concentrate on my asset clients that I have on my books to look after their mortgages. So I came from the complete opposite, but the trials and tribulations of transitioning either way, I think it takes a skill set. And that skill set is to be able to understand what you are good at. And if you're not good at a particular portion of whether it be asset or certain mortgages, whether it be you know, self-managed super fund mortgages or what have you, you need to understand where you need to allocate that and who will look after it and who you can partner with. So I think new to entry brokers really have a greater extent of that warm, fuzzy hug feeling that we didn't have 20 odd years ago. To honestly, if I picked up the phone to one of the male brokers 22 years ago and say, hey, can you give me a hand with this particular scenario? And it sounds awful, but they'd go, don't ask me, and hang up. So things have changed. So I can pick up the phone and I can ring Aaron, or I can ring yourself, or I can ring other brokers, and I get, hey, Murray, let's workshop it together. So I think new to entry brokers have a better circle of influence and the ability, if they actually use their voice and have the confidence to pick up the phone to someone like myself or Aaron and say, hey, can you give me a hand with this or point me in the right direction? Their business is going to grow very quickly.
I think that what I want to do, and thank you very much, Mari, for sharing, really appreciate it. What I want to do for some of the brokers, just make sure we pull out some of the learnings from both of you. So just to pull up stumps, one of the things that both of you just came up with, which you probably didn't know, it's funny, I would go as far as saying nearly 80% of the people that are in our industry, they've come to broking and being successful probably out of need rather than want a lot of the time. So you've come from a background, that's where you've gone. If you look at Aaron's story, okay, Aaron needs to succeed because Kylie's pregnant and potentially it's affecting unfairly, mind you, her business. So it's interesting. I think a lot of people come to broking out of necessity, and I think there's a lot of people that have come from a bank background or a different background that really have to rely on that help. The other thing that's very interesting is today's session is about mortgage brokers or brokers coming to commercial lending. So it would be pretty fair to say from both of you that you would be fairly happy to endorse that asset finance is the bridge, I suppose, that both of you have taken to go and look at outside that consumer space. Aaron?
Yeah.
Yeah, absolutely. And then once you're, I suppose once you're in that space, because it's a different space, completely commercial, and I suppose most mortgage brokers don't appreciate that, you know, a number of times a month they actually invoice a bank for their services because they get it sent to them by their aggregator in an RCTI. But when you actually become used to charging a brokerage and setting out what you're worth and having to meet the market and find other ways to get yourself a better base rate, that sort of stuff, you become engaged on a commercial level. It actually then becomes quite natural for you to take on commercial work, and it just seems more natural than, you know, I know quite a few of my friends in finance that as soon as it's a commercial deal, they're kind of afraid of it, right? So
it's funny. I'm glad you called that out. For those people on the call, if you don't feel comfortable using the chat, you can message me on the chat privately. What I'd like to know from everyone attending, especially those that are newer to the industry, what are you most afraid of? What do you think the biggest challenge for you to be looking outside what you're doing now, to be looking at either asset finance or commercial lending generally? I'm really curious. And with that, Aaron, what I'm after is, what were you most afraid of? You mentioned Sam Sphere from Macquarie at the time, knocking on door multiple times and getting nothing. What were you most afraid of all those times?
So without revealing too much, I suppose in business, what matters to me is money. I didn't think there was any money in it for the time spent on it. I wasn't sure how effective I could be in both. If I was writing asset and I was writing mortgages, would one take away from the other one? I actually find that they intensify each other. It's not one or the other. But having said that, I do respect. So I know Mari does a lot of mentoring, and so do I. And there's a certain kind of broker who will call you. I'm sure there's multiple types, but there's a mortgage broker who will call you and ask you for advice. And the reason they're calling you and asking you for advice is they can't wait to offload that deal for you to write and commission split. And then there's another kind of broker that calls you up and asks you for that advice because they want to write asset finance. They understand or commercial finance. And when you're discussing it with them, you can really tell the difference between the two, right? So I would say there were some very generous people who mentored me in the very beginning. And there was probably a moment of clarity where, I mean, you and I, we've talked, there's things that I've learned from you, Chris, before your time, Tim, you know, I would call Tim. And I remember there was a moment of clarity that Tim had where I think he had that aha moment where he goes, yeah, I'm not going to get any business out of here. And he actually just wants to learn from me. And he went ahead and he taught me anyway, right? So because I've had that generosity of mentorship throughout my career, I try to give that back too. But that didn't occur in many places back in 2012. Back in 2012, you were a commercial writer or an asset finance writer or a resi writer, and you'd be darned if you're going to give up your secrets. I mean, you know, I noticed that today there's much more collegiate environment. I don't know if Mari has that same experience or if you do, but
I think the important takeaway, Aaron, as you pointed out, there's different types of brokers that seek you out. And when you are in a position to be able to hand over some relevant teachings, etc., to those brokers, you've got the brokers that want to learn how to make money fast. And unfortunately, the brokers need to realise if they're coming into this space, it's not as easy as aggregators tell you. And I'm not picking on any aggregators or anyone in particular, But aggregators tend to have, unfortunately, misguidance to some of these brokers by saying, oh, it's fast money, it's easy money, it's this money. Well, let me tell you something. It's not, because there's just as much work, but it's more pressure in a shorter period of time. So I say to my team, if there's a deal still sitting on my desk in 48 hours, why? It shouldn't be there, because the skill set has to be lifted to this level to be able to identify where these clients go, find a solution for them and get them in and out. We don't have the ability to wait 6 weeks for settlement.
And have the money in a dealer's account today.
Yeah. And the
Right.
other thing too is, when I started, and even today, we don't get trail as asset brokers. So a lot of mortgage brokers can't get their head around that. So when I wake up every morning, I'm not giving away too many secrets, but let's say I've got $250,000 worth of staff wages to pay per annum, which isn't far wrong. I have to wake up every day and my asset business needs to be settled. I don't get trail. So I have to hunt and gather new deals every day. If I don't pick up 3 or 4 new deals every day, I'm not doing something right. And that is communicating. It's communicating not only with your current base, even if you have 17 people to start with, that 17 people can multiply very, very quickly.
That it's very funny. Both of yourselves and 1 or 2 other people on this call went through our keynote with Craig Johnson before. And one of the things that he kept coming back to was what part of foot on what part of ball. It's funny when you look at running a broking business, just how important those small things are. How many prospects do I need to see to get how many appointments, to get how many applications to finance, get how many approvals, to get how many settlements? It's funny. I think that what for me personally, and yourselves, you certainly know, I love the detail. I love getting nitty gritty on a deal. But in terms of running a successful broking business, you've both sort of, well, Mari, you certainly touched on the challenges with scaling your business, once or twice. But I think that for a few of the individual, sole traders having a crack at this, the discipline of actually going through and, filling your funnel, looking at, okay, this is how many people I need to see and so forth, and actually challenging yourself on the operating rhythm is interesting. I'm keen to learn from both of you guys. Do you feel you're happy with your operating rhythm on the day-to-day?
Well, for me personally, my operating rhythm has structure, but you can always improve on that. Now, this year's a great example of being very fluid in your business, whether you're a one-man band or you have multiple staff. If you can't be fluid in your business to embrace change and technology, you will have a stumbling block. So when something comes across your desk that can allow you to make changes, whether it be a digital aspect or whether it be some form of structural aspect given to you by your aggregator or by one of your lenders, you need to really look at it and what its worth is, and what its worth is to you in the sense of time and productivity. So sometimes being a solo, and I was a solo broker for the first few years, at least the first 2.5 years. And back then I used to fax 1 page at a time. Used to ring up and do my revs call to check if it was unencumbered. Very time consuming. So
there's good money in that. There's good money and lots of work, but good money in that.
Correct. But the thing for me, which is really important, is let's have a look at what sustainability and what a good business is. It's not always about how many staff you've got, or if you're writing and your business is a $2 million turnover business. Because let me tell you, when GFC hit, when I scaled back by 6 staff, I made more money in my back pocket by taking up technology pieces than having those 6 staff. It's all relevant. So again, you need to understand what it costs to run your business, how many deals, what your pipeline looks like, and what is sustainable. So for someone like me, I don't want to be the biggest broker business in the country. What is sustainable for me? What does that dollar figure at the end of the day, at the end of my working week look like? And if it means I can run on writing $5 million worth of home loans a month or $2 million worth of home loans a month, That's success. If you are continuously doing what generates the income you require.
That's a big call. That's a really important takeout that for me, I'll be honest, I'm still working that out myself. And that is, you know, you're the only one that calls out what success looks like. It's very easy to go, oh, you know, Mari and Aaron, they're just killing it. They're fantastic. You know what? Everyone's got their own measure, and you need to build that measure yourself. I mean, for me, well, that might be. Sorry, I think you burped, Aaron. Look, I mean, for me, money is important, but I think that for me, I was very happy, a little bit like Mari. I was a broker who got paid exceptionally well to do what they did for other people. And, you know, when you make that call, it's more than just, okay, how do I become a mortgage broker? How do I go from mortgage broking to other elements? There's that small stuff that we actually can relate to with all of our clients. And that's that terrible thing. Oh, hang on, we also run a small business now.
But can I just add to that? Yeah. What brokers I think need to do is get an understanding of what their value is. Are you worth $120,000 a year? Are you worth $220,000 a year? And work that backwards. So if you've come from a corporate environment earning X amount of dollars with all the trimmings, what does that look like to you? And if it means that you can do that with 2 or 3 staff or 1 staff member, that is very successful, because you know what? You've got a great balance of being able to be your own boss, which isn't always easy. It's very challenging. And I'm sure Aaron will agree with this. You know, everyone sees Aaron and I on the top of the pond looking like great little ducks, but underneath that, we're all doing
a lot of kicking.
Right?
The hungry beast.
Yeah, and it's the drive and the ambition. And I think as new to entry brokers, you've won. You've got the drive, you've got the ambition because you're here. But how do you maintain that drive and momentum? And if your income is lacking, your drive and momentum comes down. So you need to reverse engineer your thinking and go, okay, why am I losing momentum? Is it because I'm not making money? Why aren't you making money? You are not doing a productive day. We can all be busy, but what are you busy on? If you're busy scrolling through LinkedIn or scrolling through this, what are you actually achieving? If you can't measure it, you've got nothing. You have to measure your productivity. And if it's not measurable, it's just not there for you. So if you have to understand a busy day, I can have a busy day, but be at lunch all day. Now that sounds really silly, but if I've got things in the background and structure in the background that allows me to go and have a lunch with Aaron or Chris to expand on my knowledge and expand on what I want to achieve in my business, that's productivity. Just by having lunch can be very productive with the right people. But if you're going to lunch with your girlfriends to whinge about, you know, oh shit, I had a bad week, that's not productive. You know, so again, you need to outline that as an individual solo broker.
Sorry, Chris.
No, please.
I suppose most people probably think I'm a little bit sad in that I never made the separation of success, which I know I'm in the minority now, but it used to absolutely be true, which is, to me, success, and I said it glibly, is money. But I have actually, I never made the jump to job satisfaction as being a part of success. So I have a moderate amount of both. I have a lot of job satisfaction at the moment, I got to say. I was carpet layer for 17 years. I was in the service. We used to do a lot of dirty jobs. I've always said I could work in a salt mine shoveling salt, and if I made enough money, I'd whistle all day long, and then go home. So
what do you think about that now? I'm sure you don't think that now, surely.
100%. I still think that way. And so, you know, in the beginning of this, I told you, you're going to think I'm sad at the end of it, right? So
everyone's story is different, man.
I still do very much look at success in those terms, but I'm very thankful that we're working the jobs that we do, right? So like I said, I could work in a salt mine and make enough money, but yeah, not that they pay enough in a salt mine shoveling salt, but we're very lucky that we work in an industry where we help people for a living. There's plenty of industries out there that aren't helping people for a living. So I've always just considered that a lucky part of having my wife choose my industry for me. How's that? But
I'd like to add to that, Aaron. You know what? The other really important thing to brokers, whether you're male or female, the boundaries, there are no boundaries on the income potential. So it's not gender bias in our industry. So a woman can earn just as much as a man and vice versa. And I see the fact that, you know what, if you come into this industry with a great mindset of sustainability, how long do you want to be doing this job for? Now, I've been doing it 22 years. The average person lasts 4 to 5 years in their job before they no longer have job satisfaction. Mm. I have great job satisfaction. I do work very, very hard, but I view it as, you know what, I know I've got longevity. I know if I want to keep doing this for the next 20 years, it's very, very possible. And I know my income can change year on, year out, and it can go up or it can go down, and I can reduce my hours. So as brokers, you can manipulate that. You can control what that satisfaction looks like, whether it's lots of money and no time, or whether you have a good balance of it. But you can turn it off and turn it on as much as you like. So you are in control of your destiny and your income, which is a fabulous feeling to have.
I've got to talk about the control quickly, because that's really what inspired me to go out and work for myself. I had never had, there's a lot of people, and certainly both of yourselves, because I know you both fairly well, you guys certainly have a very strong entrepreneurial spirit, both of you. Certainly if you bought a property in your 20s, Mari, good, well done to you. All I would say is that there's a lot of people out there, and in my case, I was working nearly 85, 90 hours a week for somebody else. Now, you can get paid amazingly well, but if you bring that back to a per hour, that's almost back with Aaron in the salt mine right there. So, you know, I made the call that I wonder what I could do if I worked 60 odd hours for myself. And it's interesting because through COVID, people have started to understand a little bit more about work life, and hey, it is not an issue anymore. You hear babies in the background, you hear kids, and it is now, it's virtually accepted now. So I think that there's probably, and Mari sort of spoke about before, there's never been a better time to be a broker. I think that the thing for me that I always look at is, well, okay, where are we going? How do we measure? And you guys have provided some great insight.
Can I ask a couple of brokers online, as new to entry brokers, there's always challenges, but what's the biggest challenge for them? The roadblock, I sit on a couple of forums and panels, and the roadblocks that I hear is always around the financial piece. Now, it's, as I give my my thoughts on this when I sit in these forums, is when you go and buy a franchise, such as a Gloria Jeans or whatever, right? You don't go and buy a franchise with no backing behind you to see you through your first 12 months. Why would you come into this industry without some form of fallback position? You do tend to set yourselves up for failure if you don't have a fallback position. Now, if you've come into this industry with no savings in the bank, or maybe your wife or your husband's working to support you for the first 6 to 12 months, you are really setting yourself up potentially for failure.
That's quite controversial there, Mari, because I think there's a lot of people would say that.
The stats show it. The stats show it. So controversy or not, the stats actually show it. Our industry, unfortunately, has gone to market and said, hey, be a broker, you'll earn $110,000 in the first year. It's, you know, money for jam. You don't have to work long hours. You're your own boss. This has been going on for 20 odd years. right? And it's only really in the last 4 or 5 years that the lights have gone on. We can't be telling people those things. We need to give them the true understanding of what it looks like. So,
well, guys, I agree with Murray. I'd love to hear some feedback. I think there's a few people on the call. I know a few of you may not be keen to provide your feedback over the Zoom call, but hey, message us in the chat. We'd really like to know. All myself and Murray and Aaron, as Murray said, like you're looking at, you probably couldn't get 3 more people that really care about new to industry brokers and where our profession's going. I'm really keen to hear from you guys in terms of, you know, those things that are an issue now.
And I think there's ways to get around it. And the ways to get around it are, you need to partner well. So sometimes it's not always best to go out as the Lone Ranger and think, you know, I can do this with no backing. A lot of brokers new to entry need to probably reverse engineer their thinking by going, okay, what would it look like if I partnered with an Aaron, or I partnered with a Mari or a Chris, or I partnered with a Smart Line or a Smart Move? What would that do for my career within the first 3 years of business? You can still technically be self-employed, but the hardest challenge that most new to entry brokers have is they're out in the wilderness on their own. Yes, they've got their aggregators. Yes, they've got their BDMs. But realistically, that whole encumbering piece of having someone guide you through those first few years is really relevant for the longevity. And I think the rethink of, you know, what does your solo brand actually mean? Does it mean better to join a loan market, or does it look better to join a Smart Loan or an Aussie or a well-established broker firm and run under their brand to get yourself established? Because eventually you will be that person, you will be that brand. So I think that's really important.
It's true. I did have somebody. Well, I got 2 points. I had somebody one time say to me, Aaron Grafenius, and then there's a sub whisper from Loan Market. Like eventually, after being at Loan Market for 13 years, there is a sub whisper, from Loan Market, and you do become attached to the brand that you're a part of, and it actually becomes a large part of yourself. But I would say, in finding partners, in partnering, there's a weird, it's probably not our industry specific, but I think a lot of times it's pronounced in our industry, which is, she wants to say she's 48, she's probably 39, Mari. But I'm 50. I'd certainly look a lot
What's
older.
Across the bow? We're trying to make things controversial here.
Well, let's put it out there. Okay, I'm 28.
But the funny thing, in this time in my life, I think to myself, all right, and I hear this from brokers a lot, right? Been doing it for 20 years. How are things going? Oh yeah, I'm getting there. Getting there? When the hell are you going to be there? Haven't you been doing this for like 15 years? What do you mean you're getting there, right? But I'm getting there too. So the funny thing about it is in the last 2 years, I've become a lot better at being a broker, right? And I can't imagine, in some of the plans that I'm putting in place, I've got a virtual office now, I'm integrating teams, I'm integrating, I've shown Chris in the past, a virtual office space. I'm integrating, I'm looking outside of my own tracking systems into, like, you know, integrating with Monday.com, which is getting better and better, or that sort of stuff. So I feel like I'm getting good at it, right? But I am still 50. So what was the plan? Like, I would get good at it, like really good at it when I'm 62, 3 years from retirement? And how many times does the knowledge have to be recreated from scratch? If you're not partnering, like I never partnered early with somebody who would have the resident knowledge and the IP that he could have just passed to me.
You could have saved yourself 10 years ago.
Yeah, that's right.
And it's true. You know what? If you think about what new entry brokers have got to deal with, It's all around product knowledge. It's getting your head around compliance. It's getting your head around who do I need to be talking to? What events do I need to be going to? How do I make myself relevant in the community?
Wouldn't it be nice if someone
So
just
much
told you,
going on.
go do this now, this is going to help you?
Yeah. And there is just so much going on. And in the meantime, you have to wear so many different hats to run a business. Who's doing my best? Who's doing, you know, who's looking after my super? All of these things, it's not just, I'm going to be a broker and ride alone. So if you actually come in and you're prepared to do all of those things, and you have the staying power to do it, and the ability to pick up things very quickly, you'll probably get there within 2 or 3 years, but it's not sustainable. But if you partner well, you've cut out 10 years worth of the challenges that have been put before us previously, which allows you then to work on building your book. It allows you then to work on all the things that you like to do as a broker, and that is meeting people, talking to them, fixing their and looking for solutions, rather than worrying about what colour is my brand going to be for this year. Oh my God, what am I going to do? You know, I've got to go to this event, but I've got to do this deal. You know, all these, and not everyone likes doing events or whatever, but we're in the business of doing business and meeting people. If I don't know too many successful brokers that just do it behind their desk and not get out and talk to other industry people or sit on webinars and things like this. So I think, again, you could probably, as individual brokers, if you think about how you want to partner, don't think about, you know, Louise Smith as the brand, because Louise Smith in the Northern Territory means jack shit. But if it's a Loan Mark or a Smart Move or what have you, or an industry broker that's been around a long time, who is well known, you've cut a lot of years out, and you're going to get to success very quickly.
We've got one brave soul. Thanks, Paul. Paul's come and said that, look, he's coming off the back of an existing accounting and financial planning business, and knowing Paul very well, he was quite successful, very successful really, as a financial planner and working with financial planning businesses. So I know Paul quite well. His comment is that his challenges around product knowledge, aligning that knowledge to the client objectives. He's acknowledged he's got a great mentor, and he's been able to leverage off the existing client relationships of the accounting firm. That's obviously, by the way, Paul, awesome. We haven't had a chat for some time, and I didn't know you were on the broking side of things. It's great to know, and I look forward to catching up with you more after this. In terms of, you know, you are talking to some pretty successful people on this call. The product knowledge, and I'll address this, and I'd love to hear what the other guys think. I would say product knowledge is something that's probably the easiest of the lot. The aligning to the client objectives, I think because you come from a financial planning background, you're used to that whole onion layer, peeling off piece by piece to make sure you actually get to the bottom. And I think the big challenge for a lot of us is we tend to sell a product versus a solution. So if you avoid that and get to the solution, get to know that client, you'll find the product knowledge is, quite frankly, it's incidental. It's exactly like your financial planning, mate. I think that once you get to know the client, you get to know all of those, and get to know the why. The how you can come with, but the why is the big part. And there's so many brokers that miss the underlying opportunities by not asking an extra question.
And also, Chris, you have to ask the question. Sometimes I think brokers tend to want to give an answer straight away. And one of the biggest things is, I think if you're slowing, we're talking about asset finance here, if you slow the client down in the very beginning and go, right, okay, what is your pain point when purchasing this piece of equipment? Is it because you don't have financials? Tick, okay, we can work with this. The other pain point is they might have been on payment pauses. So you find out where all the pain points are, then you go, right, leave it with me. I'll come back to you very shortly. You've got a gamut of lenders. Most brokers work with a panel of around about 43, correct me if I'm wrong, 43 different lenders. There's multiple scenarios that can be put forward, but there's only a small solution for certain clients. So once you've narrowed down really what the harder points to fix, it does narrow. I mean, I ran one by you yesterday, Chris. I already had it in my head where I thought it should go, but there's a few missing pieces to the puzzle because this client had so many different speed bumps that I had to overcome. But we overcame it within a phone call and understanding the real pain point, not only to the client, but to the lender that we were choosing.
Yeah, so and that's a big one. I think there was another broker this morning who was saying, Chris, one of the best pieces of advice you've given me was, you know, you really almost have to act like a lawyer for the lender. You almost have to troubleshoot everything that can possibly be wrong and anything that could possibly be going on in the client situation, because that way, when you're putting your submissions to a lender, certainly with commercial, you know, you're in front of it. You're in front of what the client's trying to achieve, and you're in front of how the lender will perceive your client. It's important to, and that's probably to your point, Paul, that's an interesting one. I think that the product knowledge and the client objectives, to Mari's point earlier, it is important to try and slow the client down to an extent. Like I think there's nothing wrong at all with ever saying to a client, look, I just want to make sure we're getting the optimum result for you. I need to consult with a few colleagues and I'll come back. There's nothing wrong with that at all. Firstly.
Also, I mean, the best way to get product knowledge is to do 5, 7 million, 10 million a month for the first 6 months of working. And I got to say, I've got a gentleman in my office who's been doing it for 8 months. As far as home loans go, his product knowledge would be far better than mine. He knows what Adelaide Bank will do, what products Adelaide Bank has. He knows what products Macquarie has, and I suppose even the little intricacies of when you order a vowel with somebody or when you don't, and what land size, and will they do vacant land or whatever, right?
I think both of you guys, you've got aggregators that are providing you tons of that product knowledge. Yeah?
We get a lot of that through our software, right?
Yeah.
But what you don't automatically know is, like, for me, is lender appetite, right? So when Mari's talking about, you know, having a decision tree of a whole bunch of different factors for a client, one of the things that you get in time, I suppose, is sitting back and going, you know what, well, it used to be more true. You could say, well, you know what, that's a Macquarie client right there. They'll do it. You know, it's not exactly what they want to see, but they'll do it anyway because it's met it in so many different ways. Or some even in personal loan, like in home loan lending, you know, what lender is going to do short-term self-employed and all the rest of it. And you could think, well, there's a, you know, ANZ is already sort of somebody who is hip to that, or Commonwealth Bank is hip to a recently self-employed person, but they're going to have to be the right client for them. They're going to have to, it's not so much of a product. So I find that as far as product knowledge goes, I can fall out, because I haven't done a home loan in ages. I can fall out of exact product knowledge pretty rapidly, but what lingers from a mentoring standpoint, especially, is an understanding of around lender appetite and what they're actually looking for as a lender. I don't know. Do you have that experience too, Mari? I'm just curious.
Well, you know what? Obviously, 2020 has given us a little bit of a headache anyway. So I know I went through a bit of a stage sort of from April to September. Again, I've been doing it long enough to know that is a Macquarie, or that is a Metro, or that's an ANZ, or what have you. But what I found was what I thought when talking to a client this week, during that period of time, the appetite was changing very, very quickly.
Yes.
So I don't think we're going to see too much of that rapid change again moving forward post-COVID. But how I managed that challenge, and it used to frustrate the hell out of me, because I'm thinking, I'm no longer good at this. What's going on? But what really I focused on was to slow the client down again. And that was a good key factor during that period, was to say, look, Times are changing right now. We're in the middle of a global crisis. Our lenders are still coming to terms with what their appetites are. I need to do some research and I'll come back to you.
Yeah.
Oh,
changing on a week-to-week basis.
Correct.
Oh, it was massive, wasn't it? It was insane. During those first few weeks between March and April, because we've been digging into asset finance, the turnaround times and the appetite was amazingly different, wasn't it? Crazy time.
And you know what? Diane Clark's just put something up there, and hi Diane. She's basically putting that she's concerned about the time and doing a perfect job for the client.
Oh.
I tell you, Diane, perfect is never going to be there, because ultimately you've got the client who tells you one thing and may not get it 100% right. You have the lender who's changed their appetite, and then you're the glue between it all. So it's all in your wording, Diane, and you need to be confident in yourself. And coming back to that period in time for me, I was lacking confidence. I almost felt like an imposter, thinking, God, I've been doing this 22 years now. I don't know where this goes. But how I navigated what you've just said there, how do I do a perfect job? And we always try and do the best that we can. It will never be perfect. So take that pressure away straight away and you need to steer the client. You need to be in control of the client and the expectation. Once you've mastered that, I think you've got almost perfection, because if you can navigate the client, control not so much the outcome, but control the way your client is moved up the line, you will do a damn fine job, whether the outcome is an approval or a decline. With that confidence, Diane, of saying, I will try and find you the best solution with the information we have right now. It may take some time.
Mari, one of the difference, there's a lot of brokers that might know a little bit. There's a lot of brokers that might not know a lot. But the one commonality I find between the very best brokers is this: they communicate. They communicate and they communicate. They talk to their clients repeatedly. They nurse them through the process. They predict where things are going. They have that regular dialogue. That client knows exactly that they're being looked after because you're talking to them.
You know what, when Aaron said that he had a pile of 17 clients and he started with the easy one first, well, I don't know, I must want to torture myself. Every day I have my broker supports, the girls come into my office with me. I'm working on up to 30 odd deals at any one time myself personally. So I have the team come in and I always insist, what is my hardest task for today? I'm going to do that this morning. And you know what? I do the hardest task first because I'm not procrastinating and then getting anxiety over, God, shit, I've got to call this client. If I get declines, and I do, I more often than not these days, get a decline because of certain situations, I look at that decline and go, you know what? I'm not going to lose this client. I may not have them today, but that decline means if I take care of how I communicate with this client, I will have them this time next year. So a decline means an opportunity for pipeline. Don't ever look at a decline as, oh, fuck, I can't ring that client and have that anxiety. You need to look at it and go, well, you know what? This client is now my pipeline. How do I turn this conversation from a decline to you will be on my books at some time soon? And
recommending
once you change your wording and the dialogue, you don't really lose a customer.
It's funny, Mari, in the very first session of Broker Illuminati, we had Fabian and we were talking about private loans, and obviously private loans are a very, very scary situation for a lot of people. And one of the questions we asked Fabian was that if you wanted to write more of this, you know, what are some of the tips? And the number one tip he came back with was, you're going to lose a client at some stage. You need to accept that you are not going to be perfect and things are going to happen in the process, but that's what we do. We have lenders in the mix. What we can control is our communication. What we can control is improving our knowledge. But in terms of the time and doing a perfect job, I think it's a very interesting dichotomy. And no problem, Diane and Paul, look, really appreciate it. And if anyone else would like to take advantage, please do. You've got an amazing team of people here willing to give their time.
Can I share a fail?
Yeah, please do. I think everyone wants to, a lot of people want to talk about success, but I think it's important to share what was your biggest fail?
A recent fail. I can't tell you my biggest fail.
Okay.
Same reason Murray can't talk about from 1988 to whatever.
Be nice, Santa Claus.
A recent fail that happened was I got caught up. This was in September, and there was an overwhelming amount of inquiry that came through, and I'm sure it was across the industry. And we, instead of dealing with, I was actually dealing with double, the volumes that I had to deal with. And my fail is kind of a weird one, and it sort of goes against the grain of how we're supposed to talk today. I had a consumer personal loan get me, like really get me. Like the people, wasn't going to make much off of it. The people dominated my time for hours. I talked them through, if we're going to use some of the funds to buy a car, I talked them through that process for an hour at night, not seeing my family. They called me on the weekend a couple of times, kind of complained a lot, demanding sort of customers for whatever reason. And it was consumers, so of course we had to get everything in the world about them. Then their income, while it was good, there was some issues because she was going to go on maternity leave soon, so we had to get return to work letters and all that sort of stuff. Anyway, it stretched out over the course of a week and a half. I did not get the finance for that person. I spent hours and hours and hours on it, right? Instead of my staff. In the meantime, I had another client who had 17 pieces of machinery, and they had made an inquiry, and it was a new inquiry. It was a new customer for me. And because I was working so hard on this little personal loan that didn't go anywhere, I took an extra day or two, and this guy was 17. I know Mari's about to say, she's about to come to the monitor on me. I left it too long. People with 17 pieces of machinery and trailers to haul them, they get something from you every 2 months, if not every month. This person was nice enough to tell me that I was too slow. And I was so angry at that personal loan person, but really I should have been angry at myself, right? So I guess the fail in it is I was talking through this with another broker, and it's just what it had cost me, and cost my business, cost my reputation, and everything about it, right? And he said, and this is good advice, well, this is advice, but use it if you want to use it. He said, you could treat every deal like the same. You could treat your top ups just like new business. You can say, I treat every customer, and I can stand in an ivory tower and say, what I do is I make sure that everybody gets the same service. And this broker, who I'll definitely not be naming, said, I have a different philosophy. When I get there in the morning and I've got 12 people to do, I start with the one who pays me the most. And I take care of him first or her first. Then I go to the next highest paying person. And if I don't get to the lowest paying person that day, they don't get service from me that day. Now, I'm not saying, now that's right, that's controversial, and it's counterintuitive to how people train and how they run businesses today. An element of what he was saying, I should have incorporated into my own business.
Yeah, that's an interesting one, Aaron, because if I was to look in 2020 at my biggest fail, I would actually say that following that advice would be my fail, because I had some significant size transactions this year that some was COVID, some was client change, and I looked at the revenue, and it's very easy to count something over the line before it's over the line, and the income number on, I'm going to say 3 deals in their entirety, was astounding. Like it was great money. And I thought at least one of those would be sweet. And, you know, that 3 was probably closer to 5 different deals. But what I looked back on, and the thing that I thought, you know what, we always learn what could I have improved. And the thing that I could have improved on was exactly the opposite. It was,
you need a balance.
Sure we're looking at our numbers, looking at our widgets, having the discipline, right? You keep making your X amount of calls. You make sure you have X, Y, Z going on in your pipeline. I would say, for me, you know, I would probably go the other way. I mean, it's important to look after your existing clients, sure, but in terms of your you know, income, in terms of how you, and some people are really good at this, they evaluate their pipeline and they go, okay, right, this is our likelihood. And maybe sometimes we're a bit close to our work, and we think that the likelihood of some of those settlements is higher than what it actually is.
And you guys, I agree with both of you on this. Aaron, especially, I've had similar where you try and do the best for every client. But in that situation, what I would have probably have done, and I'm actually able to, I would have gone, right, well, that personal loan, I would have slowed you down and said, I'm going to give you to one of my team members, and until I have everything on that email, I will not submit the loan. So put them aside and make them responsible if they haven't given you everything to be able to do the deal.
I should have, and I have team members I could have done that with. It kills me, that deal.
Okay, so then the other thing too is, this is where especially solo brokers should really consider, you know what, yes, look at the ones that are going to give you the income, because you are chasing income when you are solo. You have to. It's just nature of the beast. So if you've got a personal loan, you don't want to lose that client, you partner well with someone. Now, I work with 26 brokers out of Brisbane. They're all mortgage brokers, right? They hate writing personal loans. It consumes too much of their time. So they send their personal loans to my office. So they still get a little bit of a clip out of it. But when I'm dealing with their client, I let the client know that they have given their deal to my business so that that can be done in a timely manner, and that the mortgage broker has done the right thing by them. So again, it comes down to the partnership. If personal loans are your thing and you're happy to do them, great, go for it. But if you're doing bigger deals as a solo broker and you're doing, you know, things that will bring you more revenue rather than, you know, a $550 or $990 personal loan that gives you nothing but brain damage because she's given you the brain damage, hand it on to someone that you partner with and take a little bit to earn a lot. You'll never lose the client.
Guys, it's interesting because we've seriously gone over time for the first part of our workshop, but I think that everyone who's attended's got a lot out of it. For the people that are on the call, would they like us to go to examples of handling objections, or would you like us to share more in terms of leaning on some of the challenges that you guys face? Because I'm very conscious we've got only a handful of you, but we've got, you are getting absolutely amazing feedback from some of the best in our business. And I'm very happy to let the conversation go where you'd like it to go because you've bothered to be part of this live. It's very interesting. Just while I'm waiting for the feedback there, Aaron, I've got to say, isn't it interesting? Like, you can look at things at different ways, but we learn from mistakes. Diane's point and Paul's point as well, it's the only way we learn. We do, and it is, and Mari, you made the great point before, there's so much help for a new industry broker now. You know, there's people like ourselves that are willing to put a hand up and help, but there's a lot that other brokers are willing to.
But to that point, Chris, unfortunately, I think new entry brokers tend to be a little bit shy to want to go and ring an Aaron or ring a Chris or ring a Mari. But you know what? The industry is quite a tight-knit community. That new to entry broker might ask their BDM, what brokers within our group would be willing to share information with me?
Sure.
New to entry brokers need to find their voice and don't don't feel embarrassed or feel like you can't ask a question, because for experienced brokers like ourselves, I've been there. And when I was there 22 years ago, let me tell you, I got kicked to the curb for the first 10 years.
Guys,